Hey everyone, Calvin here from Habitat. Today I wanted to dive a little bit deeper on one of the more confusing pieces of our platform, and that's expenses. We get a lot of questions on these, and the point of this video is to walk through how to create a new expense, as well as the different types of ways that you can recoup against your deals. So, first of all, what is an expense? Well, an expense is any money that you've spent that you want to recoup for your music business before you pay your rights holders. So let's say you have a $100 expense and you have $100 of income coming from one of these revenue streams. If you have an expense set up in here and tied to one of these deals, then that $100 will recoup to you before you have to make your payments. So let's get started. We create a new expense right off the bat. We'll be taken to our create expense page. Now, most of these fields are pretty straightforward, but I'm going to stop and talk about a couple of them. So expense type is just a category of expense that you want to kind of tag this as. That's going to be, if this is a production expense, you can tag it as a production. If it's an advertising expense, you can list that there. If you've paid for a new guitar, you could add this as a musical instrument expense type. Really whatever you want there, that is going to kind of categorize the expense for you and your team. Next, you're going to add the amount. So for today, let's just say our expenses are going to be $100. And then you select how much of that amount you want to recoup. So for a 100% recoup, that means we're going to recoup 100% of this $100, which would mean that we would recoup $100 at the end of the day. If we only want to recoup 50% of this $100, then we would end up with $50 at the end of the day. And that goes on, so on and so forth. For today, let's say we're always going to recoup the full amount of the expense. Different labels do this differently, so it's up to you guys how you want to do this. For a vendor, that's anyone who is selling you the goods or services of the expense that you're creating. The date is going to be the date of purchase, and then the reporting period is going to be the actual report that you first want this to appear on. So, I'm going to move myself up there. The next question then is, what type of earnings and how do you want to recoup this earnings? Before we get into that, we'll just add a name quick, and this can just be anything that'll help you identify what that expense is for. But if we look here, we start with the question, what type of earnings do you want to recoup this expense from? Well, you can either recoup across a payee's total earnings, so this would mean that anything coming in for a given payee or a given set of payees is going to be recouped from everything that they're earning. You can also recoup from recording earnings specifically, or from specifically composition earnings, or specifically from merchandise earnings. So if you click recording earnings, that means we're only going to recoup this expense from the master side of a record. For right now, let's stick with total payee earnings, and let's say we want to recoup this from 2 different artists, and we'll show you how that works. So from here, you can of course change the recoup type, or you can add an expense file. That could be an invoice, a receipt, that you want to track and have organized or share with your artists. And then you can add notes as well. So let's start, and let's say we'll add my friend Cole to this expense. Well, if I just click Cole and don't change this field, what percentage of the expense does the payee get? Then Cole is going to be on the hook for 100% of this 100% of $100. So he'll end up recouping, the label will end up taking all the income until Cole has recouped this $100 on his account. Now, what happens, say, if we change Cole to 50 and click submit? Well, then we can add another artist for 50 as well. And let's use my friend, if I can find him, Chris Davies. And now both Chris and Cole are responsible for 50% or $50 of this initial 100% amount. And now this is going to come from all their earnings. So both Chris and Cole have publishing deals with Bonfire Records. And so this $50 is going to come from the master side. It's going to come from the publishing side. If they have any merchandise that we're selling, it's going to come from the merchandise as well. And of course, you can edit those right here. So that's total expense. It's perhaps the simplest way to add expenses in Habitat. But it's also the most broad, kind of the least specific. So what happens if we, say, don't want to recoup against recording and publishing? Let's say we have 2 separate deals and we are only spending on the master side. Well, let's go ahead and create a new expense again. And we'll just give the exact same parameters here. Now, if we only want to recoup an expense from the recording earnings, all we have to do is click recording earnings. And then this new field will appear here. So there's a couple different ways that you can actually recoup recording earnings. You can recoup them from the total earnings type. So it'd be, you can recoup this $100 fee or this $100 expense from the total recording earnings that are coming in. Or you can add deal shares. So with these final three options, proportional to earnings, proportional to deals, or fixed amounts for each deal shares, you can actually go in and add specific shares of specific deals. And we'll get to that in just a second. For now, let's say total payee earnings. And this will look pretty similar to what we were just looking at, right? Same screen. And kind of the same function. The only caveat here is that this $100 is only going to be recouped from these payees' recording earnings. So if we add, again, Cole, and we can say, again, that he'll have 50% of it. And then we'll go ahead and add Chris back. And we'll say that he has 50% of it. Well, now this means that Cole and Chris still on the hook for $50, but that $50 is only going to come from the recordings earnings or the master earnings, master royalties. We're not going to touch any money coming from their composition earnings or any money coming from any merchandise that they're selling. So let's take a deeper look at those other three recoup options, the ones where I said you would actually be adding specific shares of specific deals. Let's skip adding all the parameters and just skip to what they look like at the end. So this recoup type is what it looks like if you do recording deal share earnings proportional to earnings. So when you click proportional to earnings, what that means is you're going to add these deal shares, and then whatever tracks are performing the best, whatever deals are performing the best, are going to be prioritized in the recoup. So the point of proportional to earnings is to recoup these expenses as fast as possible. And sometimes that's going to be great, and sometimes it's not quite going to work for what you need from an expense recoup type. So let's take a look at this. You'll see here we have two different deals on this. We have the Lizzie Land Sweet Melodies extension. We also have the Card I Never Sent deal with Chris Davies. Now, both of those, we've gone ahead and added all the artists from each of these deals. We've also added the label shares. So that means that the label is going to be on the hook for recouping some of this as well. But what's key here is that you'll notice we've went ahead and added, and I can walk you through that. We can add another share here. Say if I click this absence deal, then that will just add another share to that record. And we've only added Matthew Manser's share to that, but we can then also go in and add Bonfire's share to that as well. So you can add as many shares as you want from as many different deals as you want. And so you see we've got Bonfire's shares of the absence deal, Bonfire's share of the Card I Never Sent deal, Bonfire's share of the Lizzie Land Sweet Melodies extension deal, and then the subsequent artist deal shares as well. So what happens now is that this amount will be split again amongst these shares, and we're going to say, we're telling our algorithm, hey, let's recoup this as fast as possible. So in this case, let's say that the absence deal and the Card I Never Sent deal, they never made any money, $0. No one listened to them, no one streamed them. I know, sad and terrible for both the record label and the artists, but just to make the math easy, let's say $0 on both of those. And then let's say this Lizzie Land Sweet Melodies extension, in its first month out, made $200. Well, of that $200, we only need to recoup $100. But because we've set this up as proportional to earnings, the recoup is going to take the deal share that earned the most and say, hey, this is where we're going to make or take all of the expenses from initially. So this Lizzie Land Sweet Melodies extension is going to recoup that full $100 amount, and these other deals are not going to recoup anything. So again, this isn't actually very good if you're cross-collateralizing an expense across different artists or different albums from different artists, because one artist might get stuck with 99% of the expense, and another artist might get stuck with 1% of the expense. Now I should note that within each deal, because the splits are laid out as such, that's going to split equally. So let's say Bonfire of this Lizzie Land Sweet Melodies extension has a 50% split, and let's say that Cole has a 25% share and Lizzie has a 25% share. Well, in our made-up scenario, Bonfire's share would be responsible for 50% of the recoup, and both Cole and Lizzie would be responsible for 25% of the recoup. That's because all that earnings are coming through the same deal, and that's how the deal is just set up. If we look at the fixed deal share, so in this instance, we are actually adding shares, and then we can actually go in and manually edit the amount. So as we add the amount, we can say, hey, this is only $10. So Bonfire's share of A Card I Never Sent is only responsible for $10 of the $100. Fair enough, right? Then we can add a new expense, and let's add one of the Sweet Melodies extension deals. Let's add Cole to this. And then Cole, again, we can just pop in here and decide exactly how much Cole's on the hook for. Let's say he's on the hook for $65. And now this amount here totals to $100. And again, it's just a nice manual way of saying, hey, this is exactly how much that we're going to recoup from each deal share. So this can be useful if you have a compilation where, let's say artwork costs, let's say you have a compilation with 10 artists and artwork costs $100. Well, you could go in here and designate $10 to each of those artists, right? Or let's say half of the songs on the compilation are from an artist named Artist X, and the other 5 tracks are from 5 different artists. Well, you could give Artist X $50, and then you could give the rest of the artists $10, or whatever you want. That's the point of the fixed deal share. Now, if you want something a little more automatic, if you don't want to do that math each time, you can use the expenses that are the proportional to deal share. So I'm going to pull one of those up for you real quick. Or let's actually just quick create a new expense for this one. So again, we'll stick with everything we've been doing. But we'll say that we are going to recoup this as an expense that's proportional to the deals. So from here, we're going to set up the proportional recoup. The thing to understand about this is it splits the amount evenly based on both the percentages of the deal, but also the amount of shares on the expense. So if we just add a few here, let's add, say, just some expenses. We'll add Zach's 15%, and so since he's the only person on this deal right now, he's going to have 100% of the expense, regardless of the general share of the deal. And then we will add, say, Bonfire's share of this Cabrio track, and you begin to see this number changing. Now, this is because there's 2 deals here, and both of these deals have, these artists are responsible for different amounts of the deal. So this now becomes proportional to both the shares of the deal, but also how many shares we have in this expense. So if we keep adding a few, let's add Lizzie's share of Sweet Melodies. So again, we see these numbers change because Lizzie has a little less. There's 3 tracks because Lizzie's share is worth a little less. Her share of expense is a little less because Cabrio's share is a little bit more. His expense of the share is a little bit more. And so it's just a nice, fair way to designate all these out. If, for example, we had these shares, if we had shares that were all equal to each other, we would see that split evenly. So I'm going to just give you an idea of what that looks like. So you see how the math works. And so this should be a nice, clean way of looking at it. We have 3 different deals, shares in here. Each of them are worth the same amount, and so their share of the expenses are worth the same amount. Again, as soon as we add something different, that throws everything out. But you'll notice these 3 shares, which are all worth the same, or each are 50%, are still sharing the expense evenly. So it's a nice way to do that. We click finalize, then you'll see, okay, these fixed amounts are here, and it actually converts it to a fixed amount. So you can go back in and re-edit this, but it's just an automated way to calculate those shares and make them even for everyone on the project. So if you have a compilation with 10 people on it, you don't have to go and actually manually enter 10 each time. You can just add all their shares to this expense, and it's going to split out evenly according to those deal shares. And if one of those tracks is a collaboration, a 50-50 collaboration, then again, it's going to account for that. So you would have 9 people all earning $10, and then 2 people earning $5 on a 50-50 collaboration. I hope that makes sense. If you have any questions, let me know. I know this can be confusing, but hopefully this walkthrough explained it a little bit more. If you want a written instruction guide, please reach out. We have those on hand. And yeah, I'm happy to make another video or do whatever is helpful for you all.